Ladies and gentlemen, welcome to the Fintech Friday show. Roy will be joining us here in a second, but we didn't want to be late. So hopefully everyone's enjoying their amazing holidays. Roy is here.
Hey.
Yeah, we're going to be getting into a couple different predictions today. Some 2026 predictions, see what people are hoping for SoFi and into the year, and maybe some other market predictions, S&P 500, this sort of stuff. But how's everybody doing? You guys enjoying some family gatherings, some Christmas cheer, Steve?
Yep.
You'd be a blast around the table, eh? Roy?
Oh yeah. I try to take off whenever I can, some extra time at the end of the year just to be with family because they have some time off too. And one of those things that we don't really do enough of these days because it's so busy, but we used to love is play a lot of board games. So we have a tradition where we buy a family board game every year that we're not traveling. And so we got Everdell this year. And it's one of those really fun Euro games. And we also got then the spin-off of Exploding Kittens, the Throw Burrito game, and the Poetry for Neanderthals. So a little bit different changes of pace there. But yeah, good family time.
There you go. Tevis?
Yeah, good, man. It's 1 a.m. Here, so I had a little nap beforehand, and glad to be here.
You sound like you just woke up from a nap. It sounds like other people are napping and you don't want to wake them up.
Mm-hmm. Yeah, I don't want to be too loud, but appreciate you guys making the time adjustment.
Yeah, that's exactly why we're a little bit earlier today. I don't think Tevis is in the same country anymore, so little time adjustment, but we're still making time on Friday. I haven't been streaming this week. Only Steve. I saw him streaming like literally yesterday on Christmas. He was live.
Yes, because none of you were live.
Yeah. I
guess so.
I took the daily streams off this week, but still been reading, still been following the markets, still been following all this good stuff. So I'm excited to get into some SoFi 2026 predictions. Roy, I want to start with you because you said, and I probably shouldn't start with you, but you said something on X today that I think caught a lot of people off guard. Do you want to talk about potentially how you got to your price target on SoFi for the end of 2026 and what that might be?
$65 a share. And it's, any price target is napkin math. So people can go in like DCF and do it. It's like, no, I don't do that for price targets. It's just a price target. But in essence, there is a flurry of catalysts that line up. I think all of us have done videos on this. We've talked about this too in 2026, where SoFi benefits immensely. I think Tevis had like the most. He had like 35 or something like that. But mine are more broad categories. So, but yeah, regardless, all those lining up along with if we're continuing to be in a bull market, crypto winter, I don't think really matters for SoFi, and there's no recession, which we had that massive GDP print. So it looks like probably no recession. Consumer seems a little bit healthier. We got the big semi-stimulus stuff from the tax relief. Rate cuts already in December, 2 probably on the way as well. So I think all the macro pieces lined up. SoFi's execution then as well. So tech platform I talked about before, but yeah, that is probably going to blow up a little bit faster than we expect. I didn't do too much in my video that I just did on this, but part of that is that they're launching crypto more aggressively and faster based on regulation. And so anyway, between that and then the capital raise as well, what they're basically doing is prioritizing revenue growth over EPS growth in 2026. If we continue to be in a bull market, the market prioritizes that most environments anyway, but it does like to see companies like Upstart, for instance, translate an actual EPS on a consistent basis. So SoFi, I think will actually accelerate from the 30% revenue growth that's projected over the next 2 years for CAGR. And a lot of that's going to come in 2026, just because all these catalysts, some which are instrumental to the business, they have all this capital that they're going to use to ramp revenue. EPS growth will be slower than perhaps we were expecting before the capital raise, but long term, like that's what they're building for. So it's hard for me to see like a favorable environment, with at least 2 rate cuts and no recession, no bull market. And we don't see SoFi do really, really well. Maybe it gets to 65, which is my price target. Maybe it's a little bit short, but I think it'll actually outperform the gains that we've seen year to date on SoFi.
Tevis, 65, or are you doing like a 66 and 26, or what's the call this time?
No. I think people are saying I'm frozen. So
you are frozen. I thought you were being stoic,
man.
Yeah. It's probably just my internet here. My price target is going to be the most conservative out of all of you. I said $45 that it hits it in 2025, and I have predictions on the other stuff. But really, with regards to the stock price, it really depends on the macro, right? If we get a pullback from the macro for the first quarter or first half or any quarter, really, like that's going to put a damper on SoFi hitting these aggressive targets, right? Like if you have 65 and it's at 30 right now, let's say, well, it has to do over a double, and it could absolutely, but the macro has to cooperate for it to do that. So I think 45. I think one of the people said it. Tevis said it hits 45 by June. I do think that it will hit 45 by June. I don't know that it's going to finish the year at 45, but 45 at some point in the year, I think it's going to hit for sure.
Do you want to try to turn your camera off and on somehow? No. Okay.
Yeah. Maybe exit and return.
Yeah. But yeah, I don't know if I'm as bullish as that, or sorry, as Roy. Definitely a little bit more bullish than that. I definitely think that we could double or somewhere near a double. And by that, I think, a $50 to $55 price target being hit in 2026 is something that I would like to see. Now, I have member predictions, product predictions, revenue, these sort of things that maybe we can go through. But Steve, would love to hear from you. What's the price that SoFi ends up getting to in 2026?
So I thought long and hard about this question today. And I went through the macro data again, and I went through the loan originations again, and I backdoored into revenue and contribution profit and its impacts on adjusted EBITDA. I think, and I'm not going to go as high as Roy, I'm probably going to be the second highest here. And there's several reasons. The big reason is after the Fed's economic report, I am not scared of 2026 in the slightest. Now, that does not mean that we will not get retracements. That does not mean that things will work out perfectly. I fully expect a 5 or 10% drawdown at some point. But I'm not seeing an environment where we go into a recession next year at this point. And I was worried about that because of unemployment increasing over the year. But in the Fed's economic projections, they showed that unemployment's going to taper off. We're going to get GDP growth for the next 3 years. And the Fed's numbers are probably very conservative after what we saw in the latest report. Inflation is basically dead. And I'm expecting as long as oil stays under 65 a barrel, it's going to keep coming down. We see agricultural prices going down. So inputs across the board, especially gasoline, that's going to really help on the manufacturing and transportation side. I think that we're going to get at least 3 rate cuts next year. And I know a lot of people don't think that, but even if we don't get a single rate cut heading into May when we get a new Fed chair, I have to think that the new Fed chair is going to have a lot of sway, and there's going to be a much different tone in the Fed in the second half. So I think we get 3 rate cuts. I think we're going to see a huge amount of origination volume in the second half of the year in student loans. I think it surpasses on an annualized basis where it was at the height.
Mm.
Did you watch my prediction video, Steve? Because that was one of them.
I did not. No, I'm an economic buff. That's what I look at. You know that. I think there's a chance, and I know that this is going to sound crazy, between S&P 500, which I think we get in, between an explanation on why they diluted shareholders and how they're going to utilize the capital, in addition to crypto and option revenue. And if they get some deals on the banking platform, I think we can get to 57.50.
So I'm the most bullish, but I'm not like in my own stratosphere, which is good.
Yeah.
If you guys are all like 35, I'd be like,
no. So the biggest thing for me is it is a stupid thing. After everything I just named, the biggest reason is the stupidest reason. Okay. People look at it as a catch-up trade because Robinhood is over 100, and they look at SoFi as, I missed the train on Robinhood. I'm going to pile into SoFi. Maybe they get taken out. Maybe they don't. But with everything they're doing, I just think it gets a lot more popular off of an S&P 500 inclusion. So for that reason, I think we're going to be in the 50s, and I think on the higher side of the 50s by the end of the year.
Tevis being by far the most bearish in his own camp. I also think probably the widest spread that we've had.
What was your number, Tanner?
50, 55-ish.
So we're going to make yours 55, just higher end. That's what counts. No ranges.
It's 30% of my portfolio, guys. I will happily, like, with both hands open, take 55 plus, right?
You won't get there, bro. The amount of covered calls that you're going to write on this name, you will never
out at 40.
You're going to have none of your portfolio left by the time we pass 45.
You'll have to be telling Noto, like, please dilute us now. Please, now.
I like that sometimes I'll see comments that go, what do you think the price target's going to be on March 17th? It's like a very specific date of some sort. They're like, what do you think about this date?
S&P Inclusion Day.
Yeah.
But yeah, going back to Steve's point, like I don't know that it's necessarily the stupidest reason, but we can see how the market treats names that continue to accelerate revenue growth, are perceived as a catch-up trade, and are in this space. And there are financials that are getting more of a bid right now than they had been, for a while. We've been range bound for a little bit. And frankly, SoFi will do that. It'll go on a massive run, and then it'll need to consolidate. Most stocks do. I mean, none of us, like, we're all bulls here. Otherwise we wouldn't be here. And I know that there's, some bearish analysts. I think there were some that were put out, I believe it was today, not yesterday. Man, they're set up for such a good year though. And that's actually making me reconsider my thoughts. So I've been raising some cash, making some buys here and there, more last week, none this week. And then trying to think of what I want to focus on buying and adding to, as I have some additional funds coming in January. And I'm like, man, maybe I just want more SoFi, even though it's still a large chunk of my portfolio. I believe that price target, and I'm looking like the only other thing that's in my portfolio, which I think can perform as well, maybe BM&R, Air Test Systems as well, but there's more risk in both of those in SoFi. So,
bro, there's definitely things in my portfolio that could do very well. Like, if we're just getting into a broader topic of what could perform, I really do think that Nvidia could like double next year. So we'll see. But
for my price target, I mean, like my price target's basically a 2.5x. I see Nvidia could double 2.5x.
I didn't realize. Yeah. My price target and your price target, I guess, are there's a wide margin between.
Yeah, like same with BM&R. Like BM&R, I think could and has a better chance than Nvidia. Evan wants me to say it, so that's why I'm saying. No, I'm just kidding.
Tanner, let me ask you this: do you think that Nvidia can get to a 9 trillion market cap next year?
Yeah.
Not only do I think it, it's like the Wall Street's average right now.
That can't be Wall Street's average.
Wall Street, I think their price target right now is 275.
Did we see some?
Nowhere 275 is.
Yeah, but there's a bunch that are 350 plus. Like their price target is way higher than where we are right now.
Yeah, yours would be like 400.
Yeah, 275 is nowhere near 9 trillion.
And I know a lot of these.
I was thinking more closer to 350. If Nvidia's run up too much, I might be still thinking about it at like 175 here, not 190. But
high is 352. But I think a lot of these. I think I saw one analyst note on Nvidia coming out since the Grok semi acquisition. But I mean, that's accretive.
That was a weird one. I can't wait to talk about that one on Tuesday, because that's a really interesting use case.
Yeah.
On Tuesday?
Mm-hmm. When we do our other show? When we talk about general stuff?
Like, I don't know of anything on Tuesday. Yeah. Did you guys try to look through any numbers of SoFi's members, products, revenue, something like that to see where you think we'll be by the end of 2026?
I just looked on the revenue side. I was looking at the price target, I was looking at price to sales, and I was looking at what happened as far as the revenue with the PEG ratio as well. But it was mostly on the revenue, and I'd put in 37% revenue growth, which I know is like extreme in 2026, but that's what I see. I don't remember the number though. Got you.
I'd have to see what that would be, but essentially. So I think that we're going to have all 4 quarters over 1 million new members in 2026. 1.1, 1.2, 1.27. Going through 2020 or 2026. And the reason why I believe that is that would be the same growth rate that needs to hold up at minimum to get to the 50 million mark by 2030, which is when Anthony Noto said that we'd be at 50 million members. And that's growing slower than where we were growing in 2025. So growth would slow, and still that would lead us to over 18 million members, 18.1 million members by the end of 2026. So I'm a believer that can happen, but do you guys ever think about that? Like, Robinhood's growth on users had, sort of plateaued, definitely had slowed down. The fact that SoFi's members is accelerating and starting to get to some serious numbers here, like 12.6 million members potentially going into 18 million members by the end of 2026. Can that just keep continuing over time, or are they going to hit some sort of total addressable market or percentage of market saturation that ends up slowing down the ability for them to grow members?
I think it can keep going because you have to see how they're acquiring the members. I think prediction markets are going to give you a ton of new members. They're not going to be as lucrative. So their lifetime value or the customer acquisition cost is going to be lower. The lifetime value is going to be lower.
I'm talking more about SoFi, not Robinhood.
Well, I don't know. It's interesting if we want to go into like full predictions, because one of mine was like SoFi Invest could roll out some tokenization. Like they can lean heavier into tokenization, not necessarily just on the prediction markets, but if that's a path that they do lean into as they go heavier into crypto, then I could see them acquiring more members just as a top funnel into that ecosystem. If you want to have access to some tokenized fund or asset class, then it would be worth it for SoFi to have that, because it's a very low customer acquisition cost person to bring on relative to exposing them now to that entire ecosystem of products. So it makes sense. And we know
why
that
do you think that it's a low customer acquisition cost product to get them into?
Because they're generally, my perception is that they're going to be fairly niche investments, and as a result, they're going to have they're not going to command as big of a assets under management or portfolio size than traditional, mortgages and or your typical investing accounts. Like if I want to have exposure to, like, let's say okay, SpaceX is a bad example because they already offer this, but to something like SpaceX or a private company like Canva, for example, that's not in their funds through tokenization, I'm not going to put my entire portfolio there, right? Prediction markets is even smaller, but that's the reason why.
Yeah. I just Steve, make sure you mute up if there's, one of the criminals passing your street.
Yeah, I think it's like it's just been a different approach with Robinhood and SoFi. So Robinhood, like the story of Robinhood, part of it anyway, over the last 2 years has been an insane cadence that they've launched out all these products, and that's expanded ARPU dramatically. And so they're monetizing users. Now they are growing their user base, and I do think that next year is going to be a nice user base expansion for Robinhood as they deploy internationally. And there's a lot of tokenization opportunities in the other places that they're going to. But with SoFi, they've been focused more on that growing members rather than like expanding ARPU, which they'd like to do. But that really comes from launching credible products that are a nice part of your flywheel. And that's one of those things that it's going to be really interesting to keep our eye on now that it seems like the Technisys, Galileo, tech backend stuff is completed. SoFi is now migrated over there. We've seen, at least towards the end of the year, maybe that's an aberration. Maybe they saved up just so they could launch a bunch of products around the same time. I don't think so. And so as they expand their product base, we can see that they market well, they market aggressively too. And some of the things that they're doing on like the invest side and the crypto side are like, okay, it's a nice incentive, but it's going to expand that flywheel a lot. And I think they're going to launch a lot of new stuff, including maybe the big business banking, which isn't so much of a flywheel thing that ends up, but other products that come along with it that end up where a lot of people are like, hey, I'm going to get that too and that as well. And so all of a sudden, the users might grow, a decent chunk, but, if we're essentially spending like 10, 15, 20% more, I mean, that's free growth right there. It's like the equivalent of a SaaS company's net dollar retention. So, and I think that's really part of what we're going to see in 2026.
Yeah. Did you guys see the conversation that I had with Andrew Jeffrey?
Haven't yet, but congratulations.
Thank you. But there was a comment that he made that he believed in Q4 originations would slow. He actually thinks originations in Q4 will be smaller than Q3.
Q4 2025?
Yeah. Why do you guys think that would be?
I find that hard to believe with rates going down.
It seems backwards, yeah. Rates going down and big capital raise, so.
Yeah.
And especially since Homes isn't even a leader, talking about private loans when rates are going down. I mean, look, maybe he's right, but if he is, I think that'll be an anomaly. And maybe that happens again in Q1, but next year at some point, originations are likely to explode.
Yeah, what's funny is he, I think, has, practically one of the street highs of the company. William Blair doesn't publish official price targets, but they have, sort of internal metrics that they look at. So they could see SoFi at $40 a share. But what was I going to say? But they are one of the street lows whenever it comes to next quarter's originations. I think the street, he said, was 10 point something billion dollars of originations, but they're under 9.
It'd be a little surprising. Yeah, maybe, but I would be quite surprised.
Yeah, sorry, I thought you guys had seen it, but yeah,
no, it's on the list. When I go into holiday mode, I tend to spend a lot less time on the screen. So.
Yeah.
He's playing board games with his family, dude, not watching your videos.
Yeah, dude, I love it.
I did watch one of Tevis's, to be fair, but I was like, okay, I could do like one a day. I did your 35 catalysts or whatever it was. I'm like, I got to see what he's got.
It's 15. What did you think, by the way? Was there any that you want to bring up and we can talk about? Because I deliberately didn't make them like members or like revenue. I tried to the best of my ability, keep them to initiatives.
This looks like Steve wrote it. There's no such thing as time off.
There is no such thing as time off.
Did you guys? But real quick, I want to answer your question, Tevis. But did you guys see? Robinhood has like an event that's happening tonight. It looks like Vlad was like getting shot, fairly live by a camera in the office there, while almost nobody's there. I was like, that's worded very poorly for 2025. 2026, hopefully that's okay. Sorry, Vlad. But no, I was like, okay, this guy, like, he doesn't take any time off. I hope he doesn't burn out, sincerely, but I love that as a shareholder. So, but yeah, for your question, Tevis, like one thing that I really like.
Can I say one thing on that? In his clip, he's like, "Oh, the elves are working behind me." I will say, if I was like on Christmas Day or the day after Christmas, in between a weekend and Christmas Day, working at like 6 p.m. on this product launch, and my boss was right there doing a live stream calling me a little elf, I'd be flipping freaking tables. I'd be freaking pissed. So I guess the sense of why is much stronger in these guys than the normal jobs, which is good for the stock, I guess.
Plus, if they've been there for a little while, they're doing okay as far as their PSUs. So
yeah, I guess that too.
If you've ever seen the sorry, Roy, I cut you off, and then I want to go back on that. Go ahead.
So I was just going to say, Tevis, on your list, what I particularly liked, like half of my catalysts are not SoFi dependent. I mean, they kind of are, but it's yours were mostly focused on this is what the company can do more so than here's how it can benefit if it's like a perfect environment. And so I really like that. And I thought probably I should have done a better job on that myself on my list. So
I was just going to say, there is such a strong work culture at Robinhood. And you know that too, because some of the ex-employees who have left that don't fit into that culture speak so negatively of how that company is operating. They talk about zero work-life balance and all of this stuff, but you need to fit in. You need to work very hard to be there. As a shareholder, that's a very good thing to see. I mean, if you're trying to maximize profits and you're trying to maximize company success, it's potentially a good thing that people are working to the bone to make sure that you're getting your best shareholder return. And hopefully they like it along the way. and well compensated for stock-based compensation, so then both parties are happy.
So going back to the Tevis thing, though, it was one of the earlier ones that you mentioned, the acquisition. I'm kind of curious as far as that would be a good prediction, I think, for all of us is, what do you think that SoFi will do on the mergers and acquisitions side in 2026? Because they've mentioned to it most recently, Crystal Point the day before the equity raise said that there was nothing imminent, but it sounded like that they were doing at least some window shopping. And it's something that we thought could take place perhaps in 2025, didn't. So I guess if you guys all didn't see Tevis's video, Tevis, you want to share what you were thinking as far as mergers and acquisitions in 2026? And then we can all go around and do our prediction.
My guess is on the crypto infrastructure side of things. I've talked about, like, the acquisition prediction was something that I dragged forward around years that they haven't done it, because their strategy has largely been to grow through the acquisitions, and they completed a couple of big ones. And so 2025 was mostly about digesting and integrating. And I think 2026 could be the year where they go back to that, inorganic growth opportunities out there. I think the likely candidate sectors, crypto infrastructure, something that accelerates their scale into crypto. If they're going into business banking, maybe something that helps them on that front. Insurance was one that I had in previous years, where for them to like fully bring that in-house. I saw this like Reddit thread that was kind of interesting around Western Union. That was like Western Union's like a $2 billion company or something. And people on Reddit were talking about how they do like international payments, and SoFi has been doing like the remittances and whatnot. So that could be an interesting like Rails opportunity essentially. But I personally think it's going to be something in the crypto space, but who knows?
Yeah, I think Mercury is also, Evan's asking, I think is also valued around $2 billion. They were at one point valued at like $11 billion, Mercury was. They're a small to mid-sized business operation. But I think they're closer to 2 now. But yeah, I think that if they are going to do an acquisition, it's going to be more AI focused, that they'll buy a similar acquisition to Pluto or something along those lines, rather than the blockchain infrastructure. Because I think really they did a little bit of an acqui-hire through BlockFi. I think that was their almost acquisition, or picking up all the top talent from that company anyway. That's where
Flory.
Flory's from.
The Japan Wealth Management Company.
Wealth management? Yeah. You'll be saying that into 2029.
I'm going to be saying that for a long time. It does not make sense to me that they have their own mutual funds, their own ETFs, and we're not truly getting into wealth management. We're being custodians of, I will mute this. I am sorry.
As soon as he unmutes, it's just all he said. Like, do they have you surrounded, bro?
Send them back. Send them back.
Yeah, honestly, I was like, what's going on? It's Steve.
I don't know if is there strong candidates like on the wealth management front that would be like within the range that they're looking for? Like, we should make a short list. Like, hey, here's the potential categories and the companies. That's
the premise of it is, if they're going to get into business banking, having the wealth management side is a huge asset because we can double dip on fees.
I think you said it, Tevis. Wealth management front.
Wealth
front.
Yeah, I was thinking about that, but I don't know how big they are.
And no, honestly, I don't even agree with that, and I wouldn't talk about a fintech I'm not looking into. But if Roy and I were to go back, and I don't think Wealthfront was on our list, but yeah, wouldn't have cared about it.
Do you guys think there's going to be an acquisition though in 2026?
I think so. Yeah, I think there might even be a couple. One kind of smaller and maybe a larger one. I think on the crypto side there will be one, and then I was trying to figure out like what they may want to acquire for future directions. And so I was thinking, even though they haven't really done much more than just mention big business banking, but it's clear that they're wanting to pivot in business banking. So they're building up. They already have a bank president as well. As trying to look up and be reminded of who that is right now. But on the business banking side, rather. But I think maybe something along that might help accelerate that side of the business. AI, though, is interesting, Tannor. You might be right there. But I would say pretty confident that they're going to do an acquisition.
Yeah, I would be pretty disappointed if they bought a big company again. Galileo and Technisys, like I don't know if I really want to see another acquisition like that.
How was it needed that big, dude? It was like what, $1 billion?
Yeah, 1.2, 1.1 billion.
Hold on.
I mean, they're like a $30 billion company now. So like that's tiny.
And
yeah, but no.
Hold on. Technisys was pure stock issuance at a much lower valuation of the company, and the company has tripled since that happened. So saying that you don't want another acquisition like those, if the same thing happens, you basically get the company for free.
Yeah, so but that's causation. That's not a correlation.
A great acquisition though, because it allowed them to put themselves in the position to deploy products as quickly as they did.
That is not true.
It absolutely is.
Technisys was not the reason they tripled.
I'm not saying the reason they tripled. I'm saying it is part of the reason why they've been able to deploy products as quickly as they have.
No, they could have. The reason why they even knew about Technisys is because they were in talks with them to become a client of theirs. Yes. They could have just, what every other company does, they pay for the software.
No, Tannor, listen to what I'm saying. Because they own Technisys, they are not a client that is dependent on a roadmap. They dictate the roadmap and the priority status of rolling things out. So if there are things that need to be built, they say, build this now instead of being held to a roadmap where priority status, with Technisys possibly having other projects that they have to do first. That was the golden key, plus combining it with Galileo.
What part of Technisys did they need to build out?
I mean, they needed to integrate everything with Galileo, and they needed the full stack on the core for the entire back end.
That's what Technisys does. That's what Technisys did for their clients. Is they were.
We also know, Steve, that they spent a period of time post-acquisition, not even dog-fooding their own products, of selling them to essentially smaller size businesses. And they weren't even running on like the Galileo core for a while after the acquisition. So if that thesis is like, oh, we need this now to move faster, well, they would have integrated it right away.
Yeah,
but it just took 2 years. Everything took 2 years to build out for them.
And they wrote down the companies. There was, we took massive hits on our EPS because they wrote it down. It was an expensive acquisition. I think that if you go back and you look, this is even what I talked about with Andrew Jeffrey. There's one critique you can give to SoFi's management is that Galileo and Technisys was, for the most part, not a success. Like, they have 2025 end of year projections. We're about half of where they want to be. They wanted to do, $900 million a year. That's not what we're doing. We're doing 400. So it's not even like
projections they gave were 26, not 25.
No, 2025. There were 2025 projections at the start of whenever the company went public.
Oh, okay. I'm talking about the
EPS.
They did the 80-cent EPS.
Yeah. That was updated guidance. They didn't give individual segment growth.
Yeah, but and I think it's poised for a nice step forward in 2026 to like normalize healthy growth. Not necessarily the fastest growing segment of SoFi, but even still, like, it's underperformed a lot.
Yeah, but and I've got no problems. Like things happen. They thought that large institutions, like, they got hit with a lot of black swans. One, fintechs got wiped away because rates had climbed the fastest that they've ever climbed. So fintechs got killed. Galileo had to fully pivot their business away from fintechs to large financial institutions. Then financial institutions were not quick to adopt. Anthony Noto, even today, well, sorry, not today, but I mean, in recent history, has said that, like, we wish that they would act faster, but they're not. And now that Trump's being super lenient on large banks, that they still have no incentive to act fast. So we're not getting any clients from them. So now they have to pivot away from large financial institutions, away from fintechs, and over to non-financial consumer brands, hospitality, travel, stuff like this, which is still good. Like, the pivots have been crazy, but I wouldn't call that a glowing acquisition. This wasn't our Instagram.
Yeah.
On the other hand, Wyndham, potentially BlockFi, these smaller tech pickups have been, just amazing. You don't need to buy clients for SoFi. You need to buy small teams, exactly like what Robinhood has been doing. You buy these $200 tech acquisitions and then integrate that into your own solutions. Has been working phenomenally for both companies. So I don't want to see some large $2 billion acquisition, stuff like this. Like, find a Pluto, find a small team of super brilliant AI engineers and have that work into your existing $13 million customers. That's my personal opinion.
What about SoFi getting acquired?
That's fine too.
Yeah. Tevis, that was one of the things he mentioned in the video, and I figured I don't know, man. I don't think that's happening. I think it's the ship has sailed. It could be wrong. What do you think, Steve?
I mean, I'll tell you, I wouldn't be mad if they got acquired. I would not be mad at all, because at this point, it's no longer a small company. It's more of a middle-sized company at this point, in my opinion. And I think that they would catch a good valuation. I mean, at this point, they'd have to get out for 40, 45 a share minimum. Otherwise, I don't think that the board would even consider accepting it. So it'd be a pretty big jump.
Yeah, I think they'll want 45 a share, maybe a little bit even more.
I think they would at least want 48
because you have the arbitrage. So
right.
They got the performance-based stock units. They sell for 45.01.
We did it.
Yeah.
Well, it would need to be like 48 or 49 because of the arbitrage, but yeah.
What do you mean the arbitrage? Sorry.
So the acquisition usually won't be finalized right away because of regulators, and so the stock will continue trading until the actual acquisition occurs, and so it'll trade at a discount relative to that. So if it's $45 a share, it might trade at 40, 43, 44, depending on how confident the market is on that. We saw that, with the Microsoft acquisition thing.
Yeah.
So,
yeah.
But there's a different term for it. The arbitrage is, what the opportunity is if you're in that trade. But
yeah. The likelihood that the acquisition gets canceled.
Oh, dude,
So-
but like
so-
the
so
moment
48,
they
they
get an
got-
offer,
yeah.
the moment
Tevis,
they get
sorry?
an offer, the moment they get an offer, they're gonna hit like 85% of that value, right? Like if it's rumors, JP Morgan to offer $45 to fully acquire SoFi, like you wake up one day and this thing's jumped $10 to $40.
Yeah.
Yeah,
I don't know who buys them.
Yeah, that's the thing. I don't think anybody does. It might have made sense previously. Like if there was a scenario where the loan platform business existed in 2024, maybe, like for the whole year and people got to look at that. I think there might have been some buyers this year. Now, it's tough.
What do you guys think about? So one of my like moonshot predictions was that we get an executive shuffle in 2026. Not Noto, maybe LaPointe, maybe not. I don't know. My guess was like Lauren Stafford Webb or some other executives with the thought process that once they get their bonuses in June or they hit their PSUs, like that's going to be a good catalyst for a lot of them to be like, okay, I've achieved the end of this, tenure. I'm going to be moving on.
Yeah, I don't really have an opinion on it if it's not outside of Noto or LaPointe. And I don't think either of those guys are leaving.
Yeah. What if it was LaPointe?
I don't think it is.
Does that change your thesis at all?
It could. He's phenomenal. But yeah, I don't know. Like even Robinhood's about to have a CFO shift. If you were to ask me, hey, if Jason Warnick was about to leave, how would that change your thought process on the company? And then once it actually happened, I went, oh, wow, that sucks. Okay, well, I'm going to continue holding.
If LaPointe leaves, does that impact the products? Does that impact the service? I would say it doesn't. It's about member experience. Member experience is the most important thing because you need the members to stay in the ecosystem.
No, but it's gonna probably impact the loan platform business the most in terms of like packaging that up, and, making the deals and so on and so forth.
LaPointe ain't never leaving. I don't think he is. I don't think either of those guys quasi-founded SoFi. I really do believe that. I think they look at it like their adopted child.
Yeah, I think that's fair. Like it's like the same argument with Elon Musk and Tesla, where people are like, well, he didn't really found. No, dude, Tesla wouldn't exist apart from Elon Musk. SoFi today, I mean, it's a completely different business than it was when Anthony Noto took over. Completely different. So, yeah, fair.
Yeah, Facebook wasn't even founded by Mark Zuckerberg. That was the Winklevi. No, I'm kidding. But yeah.
How about this? What if Noto left at some point? Would you still stay in SoFi?
Depends who replaces him, I guess.
Dude, I think Noto, like since the beginning, he has not talked as much as I'd want him to, but whenever you go through his resume, he hasn't lost a thing in his life. Like, it is very impressive to back a company from somebody who just wins everything that they do and probably has gone through sleepless nights whenever he feels like his position is being threatened. Like, you have to tie your investments to winners. And I didn't get into SoFi and then learn about Noto. I was learning about Noto, and then that got me inspired to get into SoFi. So I really don't know if I could hold SoFi without Noto.
I would exit immediately.
As Paul says here, if Noto goes, I go.
I would exit immediately. Noto is the main reason why I got in.
It depends who replaces him.
Yeah, what if I've seen this idea out there a few times, and it's not happening, but it would be kind of funny. PayPal and SoFi merge.
Oh, I'm getting out freaking immediately.
SoFi wants to get into payments. There you go. PayPal wants to get into banking. There you go.
So Andrew Jeffrey, whenever I was having the conversation, it ended, and then we were just talking a little bit after the call, and I was like, man, I didn't have time to ask you about PayPal. What do you think about this company? And he's like, oh, they're dead in the water. Like uninvestable. Like this is Western Union for the next 5 years. It is going nowhere. They have nothing to offer. And I was like, oh my God.
I think he's overlooking a lot, but I mean, almost every analyst that was bullish flipped bearish. And frankly, there's some reasons for it. It's not just, that they are mad at PayPal for some reason. So
sentiment is at all-time lows. And I felt that whenever I was listening to that recent fireside chat with Alex Chris, and he said, like, turning around the ship is going to be way harder than I originally thought. And there's just a bunch of spaghetti code that was not implemented in a certain way. Like, Tevis, you do this, right? Supposedly that there was no protocol for getting PayPal's APIs into a business. So they just, there was no, like, every engineer has to go in, meet with a business, find it, and then replace it with their new protocol, which I guess is more standardized and will be able to be replaced automatically. But this old one, you essentially need to deploy an engineer to swap out the code on each individual storefronts, like go through their spaghetti code, like just crazy.
Yeah. I mean, there's
35 million times.
There's a part of, okay, how do we make this scalable now? And we have to rebuild it from the ground up. But then there's also another part which people don't think about, which is employees who have been there for a long time, whose literal value to the company is as a keeper of legacy knowledge. And they just, like, the context lives and dies with them. And if those employees leave, there's a disproportionate amount of responsibility they have relative to their role, because they've been in that role for so long and they've seen the permutations and they know where the bodies are buried, figuratively speaking, in the code base.
Yeah, no, that's really good insight.
Yeah, it's like there's a lot of bearish things for it, but it's kind of like, for me, like, PayPal is the opposite of Google in a way, that the part that I think analysts are just not paying attention to at all. Nobody is really, but seems just like a layup over the next 1.5 to 2 years is advertising. And there was this interview that Dr. Mark Grather did. Again, like, I know you guys know this, but for our audience, they may not be aware. He was the guy that created Uber's advertising system from ground up. You look at what he did there, the goals are the similar as here. And also Amazon, that his company was acquired, and he helped build the Amazon, which is a gigantic advertiser now, from scratch as well. And so, like, this is one of the most credible people in the business. And they had this interview. And so PayPal is, like, classically, and even under Alex Chris, it's done some of this, where they will announce some cool things, and then it just takes longer than expected, time and time again. So they're behind schedule. Advertising is the opposite. They're like, this is our schedule. And then they actually continue to launch things faster and faster. PayPal oftentimes will launch things and expect a certain amount of demand, and it falls short. Here, they did advertising in Venmo, and Dr. Grather was, like, shocked at the demand, and they sold out capacity. They completely sold out. It's advertising, like, it's not rocket science, and it's into a mid-year election cycle. Like, it just, I don't know. Like, the hard thing is, well, to be fair to the analysts too, and the market, PayPal doesn't talk about this. Like, they're kind of hidden it. They don't mention it on their earnings calls. They don't talk about it much in the fireside chats. This interview has like 1,000 people that watched it, period. It's like, why are you burying the lead, guys? Like, this is a layup, and it's not really hard to see. And what they need to do really in quarter four, in January, or actually February, early February, when they have their earnings, is, of course, guide, but also mention, like, at least an early read. Like, this is what we've done so far, so the market can understand the trajectory of what we're looking at for advertising. If it doesn't hear any of that, and it's continued sandbagging guidance, and things are taking longer, it can go lower, even though it's trading, I think, undervalued. But the advertising thing, like, is like the opposite of Google, or before, bearish on advertising, bullish on literally everything else. PayPal, I'm extremely bullish on advertising. There are some things I'm bullish on, but mostly, like, a lot of meh stuff.
Did you see Megaleg's recent video?
But it's nothing.
It didn't feel like nothing, bro.
Okay.
That was
is the honey scandal thing.
Yeah. Part 2. PayPal's lawyers went after them. It's why the video took so long and everything. And They lost like 20%. Honey lost like 20% of its audience or something like 20, 30%. Just based on that one YouTube video.
Yeah.
Like they had like 6 million deletes from Google Chrome extensions alone.
No, when the first video came out, it was more meaningful, but even then you had overappreciated the impact that it would have on PayPal. And this
Me?
You. And this has been distanced so far in terms of time. There's a lot fewer people paying attention to it. It's a lot less relevant, and like nobody cares about PayPal anymore. So it doesn't really matter, I don't think.
Yeah. I don't know, man. I think it still is an important part of their business. They paid $4 billion for it. Like,
that doesn't make it necessarily important. It means really just that Dan Schulman is a terrible CEO and just absolutely squandered golden opportunities, including a terrible acquisition, time and time again.
You hear that, Steven?
I hear it. I mean,
I'm so glad I didn't get Verizon, by the way.
But the reality is, under Schulman, PayPal's revenue, would it triple or quadruple?
It's because
I'm just saying, take emotion out of it. Did PayPal's revenue quadruple or triple? Which one?
It's because of COVID, and look at what it did when they did nothing in the COVID years. They did nothing except for things that actually harmed them. They benefited immensely from the macro. That doesn't make you a winner in terms of a CEO. It makes you lucky. But look at what you did with it.
Schulman has a long resume from the telecom industry.
Yep.
And he did not have a long resume in the payment industry. I'm actually excited about him going to Verizon because most of his compensation is with PSUs. And I think that Verizon's going to be a pretty easy company to get to at least 55. There's a company that's doing over 50 billion in EBITDA. What, Tevis?
What innovation has happened in the telco space in the last 20 years?
Oh, you don't need innovation for Verizon. You just need to increase its margin and increase its EPS at this point because of how undervalued it already is.
And what do you do? Just raise prices without giving anything in return?
No, they're going to do layoffs. They'll expand margins. Right. There's ways that they'll do it. And you're getting paid 7%. They can also issue, as rates come down, issue new debt. Look, Verizon's got 128 billion in long-term debt, but they do over 50 billion a year in EBITDA. So the ratio is not bad at all. What they can do, issue new debt as rates go down, pay off higher yielding existing debt. Their interest expense of more than 6 billion a year comes down, reutilize the free cash flow to pay down additional debt, layoffs. There's several things they can do to expand margins and get the street excited, and you're getting paid 7% to hang out and wait.
I brought up that comment, but I actually thought it said the opposite. I read it as Verizon makes PayPal look exciting, which I think is true.
Yeah.
To you guys, not to income investors.
So, Steve, you mentioned, making it more a leaner business. I agree. Like Verizon could absolutely do that. Dan Schulman is absolutely the wrong person to do that. Just look at what he did while he was at PayPal. It's like it's there. Different industry, I give you. And he's probably going to be better at telecom because my goodness, did he mess up at PayPal. But like seriously, he is not the guy that you bring into to actually, make heads roll and make your whole business run leaner. He is not.
And
he acquired happy returns, but he could not deliver happy returns.
The other thing with
you like that one, Ron? That was just for you.
The other thing with Verizon is you can also move to a model of being more direct to consumer and not physical footprint. Because how many people just have cell phones delivered to them now? Do you really need all these Verizon stores and all the overhead that comes with that? There's a lot of ways to expand margin with Verizon.
Yeah, I agree. It's the wrong guy. Like if they brought out in somebody else, I think they'd be in a better spot. I don't know why he landed that job.
He has to go somewhere, Roy. They're not just going to take him out back and shoot him. Like he's going to go to a company, right? Like,
I mean, he's getting up there in age.
What he did while he was at PayPal, I think, is against the Geneva Convention. So maybe they could. I'm just kidding.
War crimes to investors.
How old's Dan Schulman now?
I think he's 60.
Oh, he's 58. That's
Okay.
not bad.
Are we
I thought
done
he was
talking
older.
SoFi predictions?
Do you want to do revenue and EPS?
I think they're going to raise their range again, and I think they're going to come in at the top end of the EPS range. I know that's contrary a little bit to what Roy's saying with regards to them investing more in the top line and letting the bottom line sink. But what we've seen with the capital raises is, I mean, they're paying down debt and or the interest, and they're juicing their EPS as best they can. Of course, dilution is the other side of that, but they provided 55 to 80 cents a couple of years ago, and they had a couple of conditions, right? And if all stays equal, no new product lines, so on and so forth, and we've seen them have new product lines, and we know that the macro is not going to stay equal because it's going to be much more favorable than what they're going to guide. And so I think them coming in excess of 55 to 80 cents is definitely on the cards. I mean, it depends on what they choose to focus on in 2026, but if they wanted to, I think they can definitely have their EPS come in at the high end of that range, if not a little bit higher.
Yeah. Roy?
I don't remember the number. I don't have them in front of me, but it was what they had guided for, the lower range plus 4 cents, whatever that was.
Well, I think they just said the lower range of 55 cents or
Okay,
of 55 to 80.
So it's 59 then.
59?
Yeah. No, I could be wrong, and it's fine, but they're not optimized for EPS. It's incidental EPS at this point. They're growing that top line revenue.
Well, I think the fee-based revenue also helps them disproportionately with EPS than the what do you call it?
That's
the
higher
regular
margin.
fee. Yeah, it's higher margin, exactly. And so if loan platform business accelerates meaningfully, then fee-based, which is again another one of my predictions. I said fee-based revenue is going to be over 50% of total revenue for 2026. And if that's the case, then I think that's going to help EPS. And keep in mind, Roy, like the top end of that range is for them to do 20 cents of EPS for the next 4 quarters, starting in, because they report in January, then they report again, whatever, April or March. So starting then 4 quarters to do 20 cents per quarter, I think that's very realistic. They're going to do 1 quarter that's 16 or 17. They're going to do another quarter that's 22, 23, and it's going to all add up to 80. So I think them coming in excess of 80 is within their control.
We'll see. Yeah, a lot of it too depends on how they're actually going to use that capital raise. So there's some that are not going to add much to EPS at all, especially in the acquisition side. Well, depending on who they acquire, and there's others that add right away. So we'll see. What do you think, Tanner? Steve?
I don't know. I've been kind of back and forth on this. Like I find the more I know about the company, the less I actually can speculate because I know how much of a range it can be, right? And with the dilution, with the amount of growth that I think we're going to see, with the fact that they're getting into small business banking, big business banking, all of these different things, I've always had the idea that they would come in the mid-range, 68 cents. But it will probably come in lower than that with a huge focus on revenue growth. So I think revenue growth is going to be way higher than people suspect through 2026, just because we do have those rate cuts, loan platform business, new product lines, credit cards popping off, like just essentially hitting across the board for all of their product lines. But that doesn't necessarily mean that they are going to not reinvest that all to accelerate growth into further years. If Anthony Noto says that he's going to grow at 25% for decades, EPS is going to need to, be put on the back foot a little bit, especially during the really good years. So
on revenue, like what percent did you see the revenue growing this next year?
Probably north of 35% for 2026.
Yeah. which is
yeah.
like really good.
Yeah, insane. And honestly, by the time we get there, it could be a lot higher than that. Like, I'm not ruling out 40+% growth either, which is crazy. But yeah. Overall, I'm very excited. That's all I'll say. Steve?
So I want to put a 5 handle on revenue so bad for next year.
50%?
No, an overall number. Like I want to put a 5 handle with 5 billion plus of revenue. I think I'm going to say 4.92.
Okay.
And I think they come in with 72 cents of EPS next year.
It's high on both.
I don't know if it really is. I mean, what do you think they do this year for revenue?
I don't know. I haven't crunched the numbers for revenue.
I mean, if they do 3.7, that would be like a 33% increase in revenue next year, which isn't out of the question.
Here, I wasn't looking at mine annually. I'll tell you what mine is annually.
Yeah.
I mean, yeah.
I'm at I'm higher than that, bro. I'm definitely in the 5 billion marks.
What do you have? 5 point what?
I'm closer to 5.5 billion.
Wow. So you have them growing at 45% next year.
It's not unless my chart's messed up. It doesn't say that. Here, let me double check this.
We also don't have Q4 numbers, so I don't know what you guys are
Because
doing.
we're at 3.3 right now on the trailing 12. So figure they get to 3.7 for the year.
What do you mean we don't have Q4 numbers
For 2025. Q4
Tevis?
is not reported yet.
No, I get that, but why does that not mean that I can't look out?
If you want to do a year over year, unless you're doing like trailing 12 over future 12, which is fine. I'm just saying like there's not it's not the same, but sure.
Tannor, where do you think they finished this year at?
Bear with me.
Because if you're saying 5.5 and you have them at,
I have for Q4 revenue. I have.
No, I want to know 2025 full year.
Well, I have 1.04 billion. I'll just add this up for you. 3.6 billion. 3.616.
All right, so at 3.6, you have them growing.
Yeah, my thing might have been slightly wrong then. Because I have I've got two different sheets here that I'm bouncing between. So
okay, so you have them growing at
but even
52.7% next year.
Yeah, well, I mean, I think Tanner's math is correct because like even 5 billion over 3.6 is only 38% growth. So if he's saying like, oh, well, it's going to be north of 35 and he has like 5.1, 5.2, that's about 40% growth.
What are you talking about? If they're growing by 1.9 billion and they come in at 3.6, that's 52.77% increase year over year. You're adding 1.9 billion. That's a growth rate of 53%.
I have it on two different. Let me just write it all down on one sheet, and then I can tell you exactly what I have.
Tevis, he said 2025 revenue 3.6 billion.
Yeah.
And then he said 2026 revenue 5.5. That's a difference of 1.9. A growth rate with 1.9 billion is 52.78%.
Off of the 3.6.
Correct, because it's a year-over-year growth rate.
Yeah, no, I understand what you're saying. Go ahead.
I'm at just under 4,900, 4.9 billion.
Yeah, it's Roy and I are right in the same camp. I mean, listen, if they grow by 53% next year, that'd be freaking amazing.
I would be okay with that.
I would be more than okay with that.
I did a chart looking all the way out to 2030 for the amount of new members back whenever Noto said that he thinks that there's going to be a certain amount of members that we end up getting to 50 million by Q2 of 2030. Because I think he said 5 years out or something like this. And then he also said that he wanted to be at roughly 3 products per person. So that gets us to 150 million products per user. He also stated that, so the amount of products per user needs to climb, the amount of members needs to climb drastically. What's that going to do to revenue per member as we scale? Because there's sort of like 2 things, like whenever I'm looking out 5 years that I have to sort of do, which is 1, okay, he's thinking there's going to be a massive multiplier of revenue per product because there's going to be a lot more members and more products per member. But there's only so many high value customers for them to grow into. So they're going to have to grow downstream to go to that.
Not necessarily.
There's not 50 million people for them to go after.
Well, hear me out. So as you said that, immediately what my brain went to is very low barriers to entry products. If they release another Relay, for example, something that's so easy, it will count as a product and it will drastically increase their products per member without negatively impacting their credit box significantly.
Yeah, but that would hurt revenue per member.
Sure.
So
they can make revenue per member up on the loan platform business side, can't they?
Yeah, but that would still be a user that would, that they need to give a loan to. Whether they house it on their books or someone else's books, they'd still need to find users that need personal loans. SoFi's at about 15% or a little bit north of that on personal loan of the total addressable market. Now, Anthony Noto has been addressing that, essentially saying that, they believe that the total addressable market is the size of all credit cards, not the size of total personal loans. So the total size of personal loans is like a $250 billion market. The total size of credit cards in America is like over $1 trillion. So they think that they're a much smaller slice. I don't know. I think stable coins is actually going to be a big part of that, funnily enough. Like if you can offer instant loans and call that a personal loan, what is the point of a credit card? Because a credit card's purpose is that you have instant funding and flexible, like, what do you call it? Revolving credit. I wonder if Anthony Noto is going to address that and create more revolving credit products. Because that would, help with credit card consolidating. Is there anything else that we want to cover in this show? TGL? Yeah, TGL starts in 2 days, actually. Yeah.
I don't want to introduce it as a new topic, but silver. we probably need to add that to the list of things to talk about on Tuesday, Tevis.
I'm probably the only one that invests in silver.
I sold most of my silver in 2023, so not kicking myself. I'm fine with it. We needed to do that for some things, but was it? It
is
actually 2024. Sorry.
Freaking crazy. I'm looking at what the spot price is now. Give me a sec. We are at 70 what? 79.52. Are you freaking kidding me?
Yeah. What's the year to date?
Oh, I mean, the year to date is something like 160. No, it's got to be more.
Yeah, it's insane. It's probably going to 100.
What is the world that we live in? It's funny because in our investing lifetime, or hell, even in the last 5 years, I've seen oil be negative and I've seen silver be over 100% year to date. There's these things that are oh my gosh, this happens once every 7 years. And I feel like one of those things happens every single year for us.
It's up 150% over the past year. It's destroying Bitcoin. Destroying. Yeah. And here's the thing. All the silver bulls, everybody thought they were crazy when they were saying silver's going to 100. They look not crazy anymore. And it's a perfect storm with manufacturing. There's a silver shortage with all the silver needed for components for chips and RAM and all the stuff for data centers. This is a perfect storm.
It's one of those that I was like, it should have been, it was obvious. It should have been obvious to me. I own some silver still too, but I missed it.
I have 64 gigs of DDR5 in my computer. Do you think that I should sell my computer and pay off my mortgage, or do you think I should continue to stream?
You shouldn't have said that because you're going to get robbed now. For sure.
Yeah.
It's kind of like during COVID, if you had like a thing of toothpicks, it's like, oh man, I got all this lumber. Look what I have. I know what it's worth.
You know, people go around and try to scavenge motherboards and stuff from old computers and try to melt them down for the gold. Have you guys ever seen that?
I've got lots of old computers for them to melt.
It's crazy.
Yeah, I had a business that involved computer parts, not to do that sort of thing, but sometimes we'd have RAM that we couldn't sell, and so it would go right to those guys.
How much RAM do you need to melt down, and motherboards do you need to melt down to make it worth it?
A lot. I don't know about gold prices
right now,
but
not.
Yeah, energy prices going down, gold are going up, so not as much.
The cost of RAM is too high to melt it down to make any money. Okay. Are we doing an after hours, or is it sort of holidays, and what are we doing?
You're the only one that doesn't want to do it.
I'm just saying, are we doing it?
I'm game either way. I do want to do the Robinhood event thing that's in like 18 minutes, but we could do a short one, or when that hits, I'll be paying attention.
No, I mean, if we cover it, we can cover it in the after hours too, the Robinhood thing.
Yeah, that's fine.
Okay, ladies and gentlemen, we're going to set up this live stream for 8:20. So give us a few minutes to set it up. If you're a member, you could join, or if you're not a member, you can join down below, but just look out for our members live stream. Thank you all so much for watching. Really do appreciate your time, but bye for now.
See everyone later.